I'd like to invite on stage Emma Davidson.
Hi, my name is Emma Davidson, and I'm an independent investment specialist. My expertise is in the area of derivatives and structured investments. I work with professional clients that have £1 million or more to invest. For 12 years, I worked in London on the trading floors of 3 global investment banks, most recently as the head of the UK sales team at Citigroup. In 2011, I set up my own company called Affinity Capital because we wanted to offer our clients more options and bespoke services. Since setting up Affinity 2.5 years ago, we now help our clients manage over £400 million worth of structured investments. My typical client is a 50-year-old plus individual running an established and successful company. They usually have a portfolio made up of companies, cash, properties, jewelry, art, and then some exposure to the financial markets. Their top 3 concerns are growing their existing company, protecting their family wealth, and maintaining access to the financial markets. In our perspective, though, we typically find that the advisors to these clients don't have our skill, experience, or confidence to deal in structured products and derivatives, and so don't mention them at all. Invariably, only a limited range of options are presented to the client, ones that the advisor is comfortable with. These clients then sit in fee-ridden funds. Inevitable underperformance leads to these clients losing faith as they lose their money. I set up Affinity because we wanted to act independently. I genuinely believe that we offer bespoke client service. Our solution is to go into the client, review the portfolio, and the investments available. We then provide very prudent and direct advice on their situation, and once we are instructed, we closely monitor the investments that they have. I thought I might share with you a case study at this point. Recently, or at least 2 years ago, we were introduced to a multimillionaire in Monaco whose concern was that his portfolio, the financial market element, was not performing. He'd heard about structures and derivatives from his investment banker, but he didn't fully understand how they worked, and he didn't feel confident asking the investment banker. He did feel confident asking us, though, as a trusted independent. We were able to go in and show him through facts and figures what derivatives and structures could do for him and his portfolio. As a result, we were instructed to advise on a £30 million portion of his wealth. Through our expertise and our experience, we managed to increase the client's profile from 7% return per annum to 11%. We also introduced the levels of capital protection, thereby reducing the risk, and we did this for less than half of what he'd been paying previously. As well as a very happy client, we also now work with his advisor. The advisor looks to Affinity for advice and guidance on structures that he now regularly recommends to other clients of his. Affinity is currently managing £400 million worth of structured investments. In the next 2 years, I want that number to be £1 billion. In the next 3 to 5 years, I want to have Affinity thriving in Sydney as well as London. True 24-hour coverage in terms of client service, and I married a Sydney-sider, so we have great opportunities in both places. Today, I would be more than happy to chat to anyone who has £1 million or more to invest, so if you, the judges, or indeed any of your friends are interested, please do speak to me. In addition, we're interested in partnering with like-minded individuals in both Australia and the United Kingdom. At Affinity, we are known for impeccable advice and bespoke client services. We leave people feeling smarter, richer, and 100% confident.
Well done.
Thank you.
Yeah, really, really, very, very good pitch.
Thank you.
And not an easy thing to pitch at all. It's
No.
very, very complicated.
There's no
subject.
social saving the world, unfortunately.
No, well, that's all right. Sure, many of your clients give a lot of their money to good causes as well. So you making sure they've got more of it is still having a ripple effect.
Thank you.
No, look, I think you've taken something that is complex and not for the mass market and explained it well.
Thank you.
I think I'll be careful what I say because we're being videoed, but I had a meeting with the CEO of a very famous bank in the UK, the Queen's Bank, in fact, and they were talking about how they could be more personalised, and sort of by the end of the meeting, I described back to him what I think they were trying to say is how do we create a cash back for the aristocracy, and I think the challenge, as you know, when you're talking about people that are your potential customers, is they're smart. The reason they've got the money in many cases is that they understand this stuff. But also, when it comes to your area, they don't want to admit that they don't fully understand it. And so there's a real personal element, which came across very, very well.
Thank you.
I think the only way you're going to scale is by other people selling your story, because people don't want to be sold to when they're busy running their companies. So the thing I would definitely be looking for, and it's in the name, it's in Affinity, you definitely want to find your best channels of recommendation. You want to find ways that where these people hang out, whether that's their private members clubs or partnerships with those sort of people, the new clubs like 5 Hertford Street, obviously speaking to British Airways perhaps about the black card holders, and all of the other airlines who are their premium customers, and see if there's any way that there's some sort of revenue share model for you to benefit from those introductions. But keep it niche, keep it unique as you are today, and it'll be very successful. Well done.
Thank you. I really appreciate that.
Thanks, Al. Well, I'm going to be very interested to hear what Guy has to say right at the end of this with these 15 billion under management, you know? That'll be quite interesting. From my point of view, I think that was you were pitching almost the hardest thing I've heard in all of my 12 Pitchfests, which you're pitching highly complex, technical, niche products aimed at a niche market, with the products themselves being tainted by this weapons of mass financial destruction tag.
Exactly. You know, the title of my book, actually.
Absolutely. Blame for the credit crunch and everything else. Forgetting all of that, I thought it was an absolutely compelling pitch that was really well delivered. Very clear. Absolutely got what you're saying. Very well delivered. Very, very, very good indeed. Very impressed.
Thank you.
I was
really
extremely impressed,
that.
and no advice at all. It was as good as you could make it.
Thank you.
Yes, I also thought it was an excellent pitch.
Thank you.
It was very, very professional. As you were going through, I sometimes jot down things which I'm hoping will be there, and I wrote returns, percentage fees and stuff, and then as soon as I wrote it down, you started mentioning it. So I don't really have much to add. I would just say that, you know, what Al mentioned, I think is very important to you in terms of finding these super high net worth individuals and these high net worth individuals, and maybe also looking at some of the concierge services as well.
Okay.
Because they often brand things, so you could provide the white label product, and they can put their own brand on and have a revenue share.
Good point. Okay, great. Thank you.
Yeah, again, I thought that was a fantastic pitch, a very difficult subject. You came across fantastically well. I agree with everything that people have said. I won't go over that again. I would add one thing. Thank God, I think I've thought of something that they hadn't. Your end customer base is clear who they are and where they are. But you'll know this better than most. You have to fit in not just in an investment portfolio, but a relationship portfolio.
Agreed.
And the other relationship people in that portfolio will fight tooth and nail for what they think is either the right reason for their relationship and protecting their client, or to keep you out. So you've got to nurture that client base. They're your clients as well, so that they know where you'll fit, and that you'll be independent, that you'll be good, and you won't step out of your scope. So as a pitch, I think you understand that, but as a pitch, I would bring that to the fore as well, because you should be speaking to Rod and Mark about how you would fit into. When would somebody like them recommend you and bring you in, and what would that look like in relationships and so on? So you probably get the most difficult customer face-off in that you've got two sets. You've got the gatekeepers, and then you've got the customer. But listen, it was superb.
Thank
really
you.
Good.
I really appreciate that. Thank you.
Thank you.
Okay, well, yes, it was an excellent pitch. I very much enjoyed listening to it. If I can be critical of the pitch, helpfully critical, I suppose,
Yes.
is that I think you're dealing with a very high-risk asset class, or at least if you're not, it's what people perceive it to be. And I think a little bit more explanation, I know you were very short of time, around, you know, why people should be investing in this asset class and how you can mitigate risk. You talked about reducing.
No, thank you. I really appreciate that. And actually, I've written a book that went on Amazon today, and there's a lot of research in that book that points to facts and figures that back up the claim that if you are risk averse, you should be holding 60 to 70% of your portfolio in structures. So I can back it up for sure.
Absolutely. Well, sorry, yeah, put it in your pitch, because people will immediately say, I think it's a really hard one-to-one high net worth sale.
Yeah.
Because people will immediately say, I don't understand this stuff, I find it terrifying. You know, it's a bit like an Exocet could come and hit my portfolio or whatever it may be. So I think you've got to get that pitch perfect for the individual ultra high net worth. I think a very good way of expanding your business might be through partnerships with other fund management organizations that don't actually understand this stuff.
I agree.
Because it should be part of their portfolio management service, but they can't provide it in-house.
I agree totally.
So I think that's a great way for you to expand.
So that's you and me partnering, right?
Smart cooking.
I'm very happy to make an introduction.
Great.
Thank you.
Thank you.
And the final scores for this Pitchfest are 9, 9, 9, 10, and 8.